Welcome to the Business Outlook Survey press conference call. My name is Catherine Dibling, Senior Media Representative in the Federal Reserve Bank of Philadelphia's Public Affairs Department. And with me today is Senior Economic Analyst Mike Treving in the bank's Research Department. Today we will take questions from reporters about what our manufacturers had to say in September about business activity. But first, Mike will take and make a brief statement about our Business Outlook survey in September. Mike?
Thanks, Kathy. For the second consecutive month, our survey diffusion index suggests overall declines in the manufacturing sector for our three-state region. The indexes for general activity and new orders recovered from their very low readings in August, but still remain negative, suggesting continued declines. The current employment index was one brighter spot where the index recovered to a slightly positive level, suggesting some buildup of hiring for the future. And on the price front, final manufactured goods prices were near steady, but we had more firms reporting higher input prices this month. That is, the prices paid index continued to reflect higher costs and also increased for the first time in 7 months. The 6-month indicators improved notably and are suggesting that firms are not losing confidence that recent declines will continue over the next 6 months, but special questions about fourth quarter production growth in our survey this month indicate that firms still think that growth will be slower in the upcoming quarter.
Thank you, Mike. Questions? Stephen Joyce from BNA.
Thank you. I'm going to ask just a bunch, and then I'm going to be quiet. First of all, on the headline index, do you see August's drop as sort of a one-time blip, and we're not going to get down to that level again? Secondly, on the orders data that you mentioned, orders improved, unfilled orders improved, but shipments are down. And I was wondering if you could give me some analysis on that dynamic. Thirdly, in the present economy, slow growth economy, what does the inventories are slightly down? What does that mean? Does that mean that manufacturers are continuing to produce at the same level and they're just building inventories, or does that mean people just aren't buying anything? And then lastly, you mentioned there was a market difference between the 6-month ahead data and the current data. Are people just wildly optimistic about the future, or is there some other way to read that? Thank you.
Stephen, you might have to repeat some of those questions. It's
Okay,
probably a better idea to ask one at a time because we have to remember what you asked. Okay.
I'll try to go back to those.
I'll just give you sort of word hints. So the first one is the August blip. One time, right. One off, or something different?
Right. I don't know. And all of this data is new to us and sometimes a surprise. But the overall reading is, once again, I mean, more importantly, the diffusion indexes are reading negative, I guess, which indicates decline. The severity of the degree to which they're negative and or positive, sometimes will not tell us as much about acceleration or deceleration as we would like. But I think overall, these firms are reporting still some declines in their orders. Although the breadth, if you will, of the decreases were not as great in September as they were August. Most of the shares of firms reporting declines were not as large this time around. So they were all consistent with the exception of shipments. Shipments worsened a little bit. It's possible that some of the effects of the hurricane may have influenced that, inasmuch as our collection period was from about September 16th through the 13th, about a week after the hurricane, but we did notice lower shipments in New Jersey, for example, compared to Pennsylvania. Most of our firms are located in Pennsylvania, away from the shore areas. And on that note, we did tack on a question in the survey this month to volunteer any net effects of the hurricane on the manufacturing plants. The majority of firms did not respond to it, and the ones that did indicate some effects said there was virtually none. In fact, we had a plant or two mention improvements in demand because they were producing generators and pumps and that kind of thing for rebuilding or recovery. But once again, most of the plants are located in Pennsylvania. The second question again, just
the second question was, can you analyze? You mentioned the improvement in orders, but shipments were down, and there was a third indicator, which is unfilled orders, and that improved a little bit.
Right.
I'm wondering, what if you put those three together, what did that mean?
Well, I think I mentioned something about shipments that may be a possible explanation for that diffusion index going a little more negative than last month, where the other indexes, improved but still remain negative. Overall, both unfilled orders and delivery times were negative again this month, still suggesting weakness, but as you mentioned, not as negative as the prior month. And your third question was about slow growth in general.
Yeah, on the inventories, which were slightly down, I was wondering if that means that manufacturers are continuing sort of producing what they have in the past and people simply aren't buying things, or does it mean that they are ramping down on their, or ramping up on their inventories,
right.
The production, which is increasing the inventories?
Yeah, I don't think we can really say from this survey, unless they give us voluntary information about their intent or their accumulation of inventories. We really can't say specifically whether it's intended or unintended, or whether it's consistent with their plans. And those inventory numbers don't move as much as some of the other series. So I think we can't really say. I think your third question was about the gap between the 6-month forecast and the current numbers.
Right.
You may note on the chart that
headline number is very different.
Right. We saw an improvement over last month's questions on the 6-month forecast, which I'll point out last month the numbers never went negative. They were still somewhat optimistic about growth over the 6-month horizon, and this month, relative to last month, a little more optimistic. But you'll note that over the last several months, the pattern of that index has been quite jagged. It's gone up and down, which may reflect the degree of uncertainty about forecasting the future. We did have a supplemental question that looked at an intermediate period. We asked them about what they were expecting as growth in production for the third quarter, just ending this month, and then we asked them to project what they were expecting for the fourth quarter. And the average response for third quarter was growth of only about 0.3%. And on balance, more firms were expecting a deceleration in growth in the fourth quarter than were expecting acceleration. So at least over that 3-month horizon, they're not seeing a pickup in growth. Of course, third quarter growth of just less than 1% is not much for this group, but nevertheless, over 6 months, they are seeing an expectation of growth, which is better than no growth at all.
Okay, thank you very much.
Mm-hmm.
Kathleen?
Well, Mike, you did answer my question about Irene. I just wanted to get the survey time was September 6th through 13th, you said?
That's correct. We waited till after the holiday on the 5th to have electronic responses for our firms. So it's covering about the same 2-week period that we normally do, up through the Tuesday of the week of the release, which is a bit early this month, so it ran through the 13th.
Okay. What did you get from the responses any underlying themes between the shift in the number of employments from the index from negative to positive? I mean, that seems to be the bright spot in this report.
No, we did not. They focused either on commentary about hurricane impacts or just general conditions and they were on balance, I think. Not more negative than last month, but we're not. I guess we're consistent with the overall results of the survey. We'll say that.
Okay, thanks.
Follow-up questions, Stephen Joyce, BNA.
I just have one, and that is the ratio between prices paid and prices received. Is it sort of moving ahead or behind on pricing if you're a manufacturer?
We don't like to think in terms of the gap between the two. We're really intending to just measure the pressure on costs, and likewise whether firms, as a group are experiencing increases or decreases in their own product prices. I think to make some statements about the gap over time would be difficult, given that we know that these prices paid indexes, for example, are sensitive to commodity and oil prices, etc. So I think we can't make definitive statements about markups or profitability, if you will. I think the survey just doesn't go into that kind of detail.
Okay, so you can't say, since, for instance, prices paid went from -9 to that's essentially 0, but prices paid went from 12.8 to 23.2. You can't sort of correlate some type of gain or loss for manufacturers.
Yeah, well, I don't personally, but others may. But I think it's intended to measure more or less the breadth of price increases on both fronts. So I'll leave it as that.
Okay, thank you.
Any follow-up questions? Kathleen Madigan, Dow Jones.
No, not for me, thanks.
Thank you. See you again in October.
All right, bye-bye.
Thank you all.
You've just been listening to September's Business Outlook Survey press conference call. My name is Catherine Dibbling, Senior Media Representative in the Federal Reserve Bank of Philadelphia's Public Affairs Department, and with me today has been Mike Trebbing, Senior Economic Analyst. The Business Outlook Survey will be posted next time on our website on Thursday, October 20th at 10 a.m.